Long lower shadow. Now it looks like something like this. Now a long lower shadow is a white or a black candlestick. So don't get confused if you see a black candlestick that is a red candlestick or a green candlestick. It could be any. It is formed with a long lower tail that has a length of 2 or 3 times or even more of the total body of the candlestick in question. So basically, what really makes you understand that this is a long lower shadow is its tail. Its tail is so long that you can see that, okay, this is it. Now its tail is usually like 2 or 3 times or more of the total size of the body of the candlestick. Now this pattern is considered to be a good or extreme bullish signal on support level. Now why I do say that? Because of the tail. The tail shows that it had fallen so much on the day that people were afraid. It was a big red candle. But then someone came up and bought all the sellers. So it formed a tail and the price closed at the top or near the open. So it shows you that all the selling was absorbed, and at the end of the day it closed like near the open. It was a small body, whereas the tail is 2 or 3 times of the body. So it tells you that the selling was absorbed, and it's like simple calculation. If someone is buying, then it means there is something in it. Why would someone buy when there is blood on the street? And if someone is buying, then he has some information that you and I don't have. So we need to pick it up. Now let's see how the long lower shadow looks on charts so that you can see how to really understand and pick it up and trade accordingly. Long lower shadow. Now long lower shadow is just like a hanging man or a hammer. It's like exactly the same. So you might be confused, why does it have a separate heading, a separate lecture? The reason being, if it comes at a support, it is a bullish sign. Example, right here it was rising, and then it was like going nowhere. It's going straight. This is the low point. This is the highest point of this green candle, and they're going straight. So it happens to come here. Now, you know it's going nowhere. So you should be considering itself a bullish sign, because in a hammer or in a the other candle, the other pattern, it usually comes at the high moment. But right here, it's coming at a support. So this pattern, if it comes on the support, is really bullish. It means the trend is like going up again. It's considered a bullish sign because it's coming around a support. It was moving straight, and in a straight movement you happen to find this one. So once you find this one in a support pattern, it's considered extremely bullish. Why? Because at a support the price fell off and someone bought it on the bottom and the low, and it came back up. So it was like straight movement and a support level, because in a straight movement you have a resistance and a support in a straight movement, and the price is in between. So if on the support buying comes in, that's bullish, right? And that's exactly what happens in this pattern. Thank you.